Hi guys, and welcome to this trade illustration, if you like to call it that, or maybe a trade example or something. So I'm gonna show you here how I managed to come up with an analysis that allowed me to trade the EURUSD from Friday. I think it has fallen like 112 pips so far. So I want to illustrate to you how I came up to that decision to say, okay, I'm going to short EURUSD from the current levels that it was at on Friday. As you can see, the trade is panning out nicely, and I expect it to reach at least $16.50. I expect price to reach at least this level here, but it's crucial that it breaks below these old lows here. So now, looking at the price chart from a monthly point of view, right? We had price testing a higher time frame supply zone. Price was testing a strong area of supply, right here. September, it dipped into this supply and tested this bearish order block here. So what I'm gonna do, I'm gonna mark it out. I think I've already done something like this in my weekly forecast, I think, which was done like 3-4 weeks ago. What I'm gonna do is I'm just gonna repeat the same thing, but a bit quicker. So you can see already we've got this last up candle here, right, which was tested. Price came back to it at the close of August. And if you grab your fibs from this high to this low here, right, if you grab your fibs, you can clearly see where the optimum trade entry is coming in at, right there, right? That's where the OT is coming in at 1.19886. And now if you look on the chart, if you go back to your order block, the last up candle on the month, which is this guy here, right? If you look at its low, the close, I mean, the close is coming in at 19.15, and the OTE, they're not that far away from each other. So the institutional price level which was being worked at there is the $20, right? You can see that $20 was the institutional price which price was heading to, and we've got a high of $20.10 currently for the month of September. So this candle here, this is our last up candle, which we would have regarded as a bullish, a bearish order block. So what I'm going to do, I'm going to highlight the body of the candle. The reason why I'm highlighting the body of the candle and not the wicks, right, is because there is emphasis of institutional selling in this candle here, right? So we're going to highlight that candle from its open to its close. Right, so this is I'm gonna get rid of the fibs. Let me get rid of the fibs so that the chart is not that noisy. Now that's our bullish order block. Remember guys, I'm explaining to you why I came to a decision to short the market. So this is our bearish order block, right? Just gonna say OB here. So this is our bearish OB on a higher time frame, right? This is the area where we anticipate price to face some resistance. We expect sellers to come back into the market. So now what you need to do, once you have highlighted that, you see the area occupied by the wicks. The area occupied by the wicks, probably from the highest high in that range there, right? This is what's going to be our rejection block, right? this is where you need to be a bit careful. If price gets back to this level here, it's not a done and dusted shorting area, because market can break above and close. So this is our bearish rejection block, right? Now you have highlighted the candle that is controlling the current price action, this OB here and this supply zone, right? So once you have done that on a monthly chart, right, you need to be in a position to highlight, okay, we have price testing a bearish order block. Where should we see liquidity being drawn to? Where should the market go to in order to fulfill for the sellers that would have came back into the market at this level? Last month is low is one area, right? That is going to provide liquidity, right? Liquidity in the form of what? Sell stops, right? We've got liquidity in the form of sell stops below 16,952, right? So we've got sell stops below that level. So these things, you need to be able to be highlighting everything. You see, don't just look at the chart and not be in a position to see what's going on. You should be in a position to read the structure, what's happening with the price action, right? We also have buy stops above last month's high, right? Last month's high is coming in at let's see, last month's high is coming in at 19,654. That's where we've got liquidity resting there. What kind of liquidity? Those are buy stops, right? We've got buy stops above 19,654, right? So these things, you mark them out, you highlight them on the chart, so that each and every time you open that chart, you take note, okay, this is what's happening here. We've got buy stops above, right? So this analysis which I'm doing is what I did before taking the short trade. Once you have defined the structure that you are working with, already you can see we've got a structure that we are working with. We're anticipating price to face some resistance here. We're anticipating sellers to come back into the market. So now once we have done that on a monthly chart, which other area will be of significance for you to be highlighting on your chart? Remember, you don't need the chart to be too noisy, right? You look at this candle here, July price action candle, the big bullish candle that broke above. It broke out this high, broke out this high, broke out these highs and this high. What was resting above those highs? That was liquidity, right? And if you look now in terms of the candle's body, which last up candle was broken? This guy here, right? I'm putting the fact that we've got a big body candle. So price broke above this big bodied candle here. So I'm marking out that candle's high, which is coming in at 14,852. 14,852. What is resting below here, right? What is here? For those that are in the mentorship group, what is resting below that level? There you go. That's the structure that I'm anticipating on EURUSD, right? Yes, it can come back and clear the sell stops below here and then rally to the upside, or ultimately it can reach for this level here, right? The 1450 price area for it to find support. So now I'm gonna go on to a weekly chart. I'm gonna try not to make this video a bit long, but forgive me for that, because I need to explain properly for the membership guys so that they understand what we are talking about. Now, once you drop down to a weekly chart, when you see this price action here, remember this is our August high coming in at 19,648. We're just going to round it off to 19,650 institutional price point. There were buy stops above there that were cleared, right? Market cleared up the buy stops and rallied to the downside, right? That action in itself, as a price action trader, that action in itself should be of significance to you. You should be able to read what has happened. It means market has done its work up here, so it needs to trade lower. Then you see these small bodied candles with large wicks, market working both sides of the market. But if you look at the wicks themselves, where has market shown you that it needs to trade to? You see, we've got this high, lower high, because we've got a higher high here. Then we've got a higher low, we've got a higher low. But at the bottom, we've got a low, we've got a lower low, we've got another lower low. Market is clearing the structure to the downside. It's showing momentum to trade to the downside, you see, which is critical. It's not showing momentum to trade to the upside. If it was showing momentum to trade to the upside, it would have been clearing these highs here and probably closing below. The same way it was clearing the low and closing above. Clear the low, closing above. You see, that was the telltale signs of a structure that needs to trade to the downside. You see, that would be your analysis on a weekly chart. Now I'm going to go to a daily chart. You would have seen already that, okay, market is showing us some signs that it needs to trade lower, but it hasn't found that momentum yet. Now on the daily, now things become more interesting, right? Things become more interesting. You see, this is our last up candle. Then we also have this guy here is our last up candle, right? But prior to this one forming, you'd have already took note of this up candle here. So I'm going to highlight that candle first, the body of the candle, right? We highlight the body of the candle. Just gonna make it gray because it's my bearish order block, right? And then I'm going to highlight the wick, which is gonna be my rejection block, and I'm gonna put my pale turquoise there. Now remember, you are doing all this before all the candles to the right have been formed. This will be like your homework. You are busy with your homework so that you know when to enter the market. So we've got our bearish rejection block there. Then we've got our bearish OB, right? Which is that green candle that I've highlighted. Now, this last up candle, the body, you need to take note of the 50% mean threshold, right? Which is coming in right at this. If you just, obviously it's not gonna be to the pip, guys, because this is illustration. This dot here, or you can use your fibs, right? You can measure the candle right up to here. Then you use a solid line on your 50% equilibrium point. Now I'm gonna get rid of the fibs because I don't need them anymore. I was just using them to measure the 50% retracement, 50% mean threshold of the bullish, that is halfway through the bearish order block. So that's our 50% mean threshold, right? You're gonna see why it's important to have that level marked, right? So that's a daily price action where we have our 50% mean threshold. So now you can even see how the market is reacting when it reaches this candle here. We had the price action formed, market rallied to the downside. When it came back, there was a stop hunt, market traded lower. This would have been another good area to short. We traded to it again, and instantly it rejected. We kept on testing the OB and rejecting, testing the OB and rejecting, testing the OB, trading lower, right? Those were all signs for you to say, okay, maybe I should look to what? To short EURUSD. So now I'm gonna go on to a H4 time frame, right? Now on the H4, my entry was on the 18th, which was Friday. I entered this trade on a Friday with the anticipation of holding it over the weekend through to Monday, which is today. So my entry was around somewhere here, this down candle here. You see this down candle, this is where my entry is. And then we had market trading up for at least 26 pips, which I was comfortable with because my stop was roughly about 40 pips. But as you have seen now today, market crashed to the downside for a profit of just above 100 pips. You see, so why this down candle, right? This was during NY open, you see, because I saw price trading back into the bullish order block. Then we had a bearish engulfing candle here, market traded lower. Then this up and down that happened here, Powell and company, they were talking, something happened on Friday. So the market rallied up and then closed below, rallied down, closed, rallied up. I didn't care about that. All I did was just holding and making sure my stop loss is in place, because I knew that the drop is gonna come further. This is just market working both sides of the market, taking out stops both sides of the market. People, they will sell and then put their stop loss above here. Market comes back, clear those stops. Those who have bought, they put their stops below here. The market comes back, clear up. You see, that was just manipulation to a certain point. And also the other factor which I considered was my fib entry. So we had this high formed and this low formed, and then if I place my fibs there, you can clearly see OTE is coming in right there, 1863, and my entry was right at the 62%, 1848, somewhere around there. That's where my entry was, and then market traded to the downside. And also if I go to a monthly, let me go to a monthly quickly, and then I'm gonna place the fibs that I placed the first time when I was starting the video, right? These are the fibs on a monthly. We've got our high and our low, that's a swing point, and then we go straight to an H4. Once we go straight to an H4, you can see we've got our 62. So price was above the 62% and would have been looking for premium areas to trade to the downside, meaning would have been hunting for bearish order blocks, fair value gaps to the upside for market to close and then trade lower. So the signs were there, you see, everything was there. The market was telling you that, hey, watch out, I might be in a position to what? To fall to the ground. And that's exactly what's happening. So right now my target is right just up below 1650. That's where the target take profit is. But what I'm gonna do now, I'm gonna scale down a bit. Remember, this is for illustration, guys. I'm just illustrating to you how you should be trading, because you don't wanna leave 100 pips on the market. So right now this position is with the micro lot size. What I'm gonna do, I'm gonna take off half of that position, and then I'll trail stop my stop loss. So how then do we do that? New order, right? We've got new order here. So it's a micro lot size 0.5. I'm gonna take half of it, 0.05, right? And I'm gonna close that position. Now that position is closed. Now I'm left with a 0.05 position. Now I'm gonna trail my stop, right, just above, just below this low here. Why this low? I have to give the market room for breathing, because I don't want it to take out my trailing stop and then eventually rally to the downside. You see, that can also happen. But now it's just a case of me following up on price. And if you watched the forecast video from yesterday, you'd have seen this trade was still right up here. I did illustrate that I'm in a short trade on EURUSD. So that's what I wanted to show you guys, like how did I came to a decision to say, okay, I'm gonna sell EURUSD, or how I've done it. Then there's another trade that I'm holding. I showed it also on the mentorship weekly video. It's a buy position on Euro GBP. It's a buy position on Euro GBP, and you can see already it has rallied today. Price has rallied massively to the upside, and I'm targeting this area here as my take profits. And then I think I just need to trail stop this position here up to there. Already market is showing willingness to trade to the upside. You can see on a daily time frame we've already breached the buy stops that were above here, and we keep on going to the upside, and it hasn't shown that it wants to trade lower. So yeah, this is what I wanted to show you guys, the illustration on how to take a short position from a bearish order block using the higher time frame analysis. And for those who have any questions, you know how to get rid of me, whether by Telegram, email, WhatsApp, or anything. And those guys in the group, if you have any questions, especially regarding these assets that I've done an analysis on, if you have any question whatsoever, don't hesitate to send me a message, and I'll help you through as we go. So yeah, I wish you guys good luck and happy trading. Thank you.